Is trading Bitcoin a sign of lesser intellect? That's not my opinion. Those are the words of Michael Saylor, the executive chairman of Strategy. Today, we'll explore why he believes that and what it means for your investment strategy. Welcome back to WealthPodX, Tony here. Today is 25th of March 2025. Here on this channel, we break down everything related to money, investing, crypto, and psychology. If you want to stay ahead in finance, be sure to subscribe so you don't miss out on the latest insight that could change your financial games. Let's take a quick look at where we are in the market. In the crypto world, Bitcoin is trading at $86,000, Ethereum is at $2,040, and Cardano is at 73 cents. Bitcoin is still holding strong above $85,000. We start to see analysts suggest that the floor has been formed for Bitcoin. Over in the stock market, it's mostly green. Tesla is leading with a 12% surge from yesterday, now at $278. As excitement builds around the latest AI and autonomous driving developments, Nvidia is up 3% at $121. Amazon has gained 3.5%, now trading at $203, and Meta is also up by 3.2% at $618. Now let us talk about Michael Saylor's bold claim that trading Bitcoin is a sign of lesser intellect. His reasoning? The best investment returns don't come from timing the market, but from time in the market. Take the S&P 500 as an example. If you missed just one of the best trading days each year, you lose out on 85% of all gains. In fact, research shows that there are about 36 critical hours per year where nearly all investment returns takes place. That means for 99% of the year, nothing significant happens. This is exactly why long-term investors says HODL, because missing just a handful of critical moments could wipe out your potential profit. Saylor argued that the same logic applies to Bitcoin. Traders trying to time the market often end up losing more than they gain, while those simply buy and hold reap the full benefits of Bitcoin's long-term growth. So what do you think? I have done my fair bit of trading in the past myself. Now I've evolved into holding it long-term. So is trading Bitcoin a losing game, or is there a way to do it successfully? Let me know your thought in the comments below. Alright, let's get into today's morning deep dive. BlackRock, the world's largest asset manager with a massive $11 trillion in assets. So when they make moves, the financial world takes notice. BlackRock is investing $1 trillion in renewable energy, and you might be wondering why. Well, they've long been a leader in ESG investing, which stands for environmental, social, and governance, pushing capital toward green energy to tackle climate change. The clean energy market is set to grow by over $10 trillion by 2050, and BlackRock want a piece of that. It all seems like a smart business move, right? But here's a twist. Recently, BlackRock pulled out of the Net Zero Asset Managers initiatives. This initiative was a commitment from large asset managers to achieve net zero emission by 2050. So why did BlackRock back out? They said that the framework wasn't practical enough and they didn't believe that it would lead to a real change in short term. So in simple terms, they'll still support renewable energy but want more flexibility in how they get there. Despite this pullback, BlackRock is still betting big on renewable energy. They have already committed $1 trillion to green energy investment, including wind, solar, and battery storage. The renewable energy sector is booming, and BlackRock wants to be at the front of the clean energy revolution. They're investing in massive wind farms, solar projects, and renewable energy tech around the globe. While oil and traditional fossil fuel are still significant players in today's energy market, BlackRock is looking beyond them. This investment isn't just being eco-friendly, it's about securing high returns. With green energy becoming more sufficient and profitable, BlackRock is positioning itself to capitalize on an industry expected to generate trillions in the coming decades. They're not stepping back from oil entirely, they're just diversifying into the future of energy. While pulling out of the Net Zero initiative may seem like a setback, it doesn't change their commitment to green energy. BlackRock is still all in on renewable energy, but is choosing to do it in a way that is more flexible and less restrictive. So what can we learn here? Do we follow the money? BlackRock's $1 trillion commitment is just the beginning. The renewable energy sector is the future, and the big players are already there. If you're not paying attention, you might miss out on one of the most exciting shifts in the global investment history. And as Warren Buffett wisely put it, someone is sitting in the shade today because someone planted a tree a long time ago. BlackRock's $1 trillion investment is like planting a forest, one that will provide shade and returns for decades to come. Now let's move on to today's top news. The first news. A Bitcoin whale has added 2,400 Bitcoin worth over $200 million, while another whale wakes up after being dormant for 8 years. These old wallet movements often spark speculation. Are they preparing to sell, or are they redistributing funds? Last time a whale of this scale moved, Bitcoin saw increased volatility. If these coins hit exchange, prices could dip short term, but often they are just for OTC deals, so the impact may be minimal. Traders are watching closely. And the second news, World Liberty Financial, a crypto venture reported linked to Donald Trump, has launched USD1, a dollar-pegged stablecoin on Ethereum and BNB chain. However, it's currently not tradable, likely due to regulatory compliances and impending exchange listing. The launch coincides with the Genius Act, a bill aimed at regulating stablecoin, which is processing through the Senate. Trump and his family reportedly control 60% of the World Liberty Financial, which has raised $550 million since September 2024. With the stablecoin market surpassing $200 billion, all eyes are on USD1's next step and whether it will gain regulatory approval for trading. And in our third and last news, Tesla stock just surged 12% in a day, marking the biggest one-day gain in a month. Investors are excited about Tesla's full self-driving AI, which is improving rapidly and could unlock massive revenue beyond car sales. Tesla is also ramping up production in China, despite concerns about over-demand. A short squeeze may have fueled the rally as well, with bearish traders forced to cover their positions, adding to the buying pressure. While bulls see momentum, skeptics warn that Tesla's valuation remains stretched. The next earning report will be key. That's a wrap for today's episode. My first child will be born tomorrow, so I'll be going in and out of the hospital. Tomorrow's video will be slightly different from the usual daily updates. As usual, stay invested and I'll see you tomorrow.